I see a beautiful picture of some blonde girl here.
All right, then you're looking at the right picture. That is Jennifer. Tonight, over the next 35 to 40 minutes, here's what's going to happen. Jennifer's going to teach the hopper trade. This is one of the most exciting, simple, straightforward strategies that we've talked about in a long time. I'll introduce Jennifer to you. She'll teach the hopper, and then I'll preview a little trading system I call the red hopper. There is an archive of this presentation already available at 15minuteforex.net. Click on the red button on the home page, and you can watch the presentation. A word about Jennifer, and then I'm going to turn the time over to her. I've known Jennifer for about 6 years. Jennifer has been in the business of trading for 10 years, or more actually, Jennifer. Jennifer's traded everything from a $2,000 account to a $900,000 plus account on behalf of investors. She's made and lost tens of thousands of dollars a day. In the course of my journeys around the world over the last 13 years as a trader and as an educator and an author and a podcaster, I've spoken to hundreds of traders who are successful at making a business of trading for a living. Jennifer has one of the most unique stories, one of the most simple, straightforward approaches, and she's cool under pressure, and she teaches in a step-by-step, straightforward manner. You're going to really enjoy what she has to teach us tonight. So without further introduction, Jennifer, take it away.
Okay, well, thank you for that really nice introduction. And Boris, really enjoyed your presentation. You know, when I look at your charts and they're so clean and clear without, you know, a bunch of clutter, my whole mind just goes, you know, that's what I like to look at. I like to look at an organized chart that isn't confusing you with a bunch of technicals. So I really enjoyed what you had to share about
OCD
the RSI.
is a wonderful thing.
Yeah, right. So what I have to share with you tonight, I'm going to make very simple and hopefully very concise and abbreviated. Rob and I have been sharing Hopper webinars all month, so I've been through it a few times and cleaned it up a little bit, and hopefully we can, you know, teach you something that is remarkably simple that you'll be able to go out and give it a whirl tomorrow and let us know how you felt about it. So the Hopper is a basic trading strategy utilizing the MACD. MACD is a technical indicator that is probably already sitting on most of your charts right now. It's something that you've been looking at every day. It's not a new indicator and it doesn't cost any money. So it's free and it's already on your charts, and it's something that you can probably walk away and immediately have a look at after this webinar or during this webinar. In fact, in the last webinar, somebody sent me a message on Twitter and said he took his first Hopper trade live while I was giving the webinar. So that was pretty awesome to hear. So what I'm about to tell you is so completely simple that I think when you hear it, you're going to laugh, especially if you know something about trading and if you've been trading for any length of time and you've had enough time to get complicated with it. This might be appealing to you, then again, it might make you laugh. But if you take it and give it a try tonight or tomorrow, hopefully you're going to send me a Twitter message and you're going to say that you're still laughing, only you're laughing with me, because it's just unbelievable how simple it is and how it's right in front of us every day. So this is one last thing to say about the Hopper is, as an introduction, is it's a strategy that I am most interested in right now for a short-term strategy, meaning I'm looking for 5 pips. Some people call that scalping, which is perfectly fine, as we discussed last night. But it's also a strategy that can be used on the longer-term charts, and it can be used for any amount of profit target. And I'm going to show you a couple of different ways to use it, and I hope that you will take it and add it to your current trading strategies and see what you can do with the Hopper and how it can benefit your trading. So the very first chart here, I have a picture of a surfer on here, and we keep talking about surfing when we talk about finding Hopper trades, because surfing is all about waiting in the water for momentum to build. You're waiting for a swell to start to build, and you have some indication that a wave is coming. And the MACD does that. The MACD is sitting there performing its calculations. It's like it's sitting there in the water, and it's sensing when some momentum is coming, and you can see it sort of start to make a swell. Just the nature of the MACD, and we're going to go through that pretty quickly. So I like to think about surfing, and I'd like you just for a moment tonight with us to think about finding momentum and feeling momentum and looking for momentum and knowing that that's when that's the kind of indication that we're looking for from the MACD. The MACD tells us a little bit about momentum and a little bit about direction. You put those two things together and you can be a great surfer, or you can possibly be a great hopper trader. So okay, we can go to the next slide, Rob. Starting with the MACD, this is just the one-page lesson of the indicator that I use. It's a basic MACD. Default settings for me are 12, 26, 9. You can use those settings. You can change them if you want to, experiment around. But what you're going to see on my charts tonight was with the settings, which are default for me, 12, 26, and 9. And the MACD simply calculates change in price by looking at history. It uses a slow-moving average and a fast-moving average. It calculates the difference between them and creates a moving average from that difference and does a bunch of different stuff. It's really not important to you or me how it works. What's important is that you see that the information it's giving you on your chart is very helpful for making a decision about getting in or out of a trade. You can go to the next slide. So this is the quick rundown of a MACD, which is probably super familiar to everybody here tonight, but we'll just review it a little bit. The MACD line is the heavy blue line, and the zero line isn't really a line, although I drew a red line over that level just to bring your attention to the fact that there is a zero level. Above that level, as momentum is building upward, price is moving upward with some momentum, and as the bars are going down below that zero level, momentum is building as price is going downward. So we have the MACD line, zero line, histogram bars. Those are the main parts of the MACD, but I'm also going to touch a little bit on the signal line or the trigger line, which is the slower moving line on the MACD. It's the dashed red line on this chart. And so those are all the parts and pieces of the MACD that you'll be hearing me refer to in the next few minutes. So here's the whole thing. Here's the whole entire trade, the whole simple trade. So get ready to laugh. When the MACD line, which is that blue line, crosses over zero, it's a hopper trade. That's the entry. And, you know, we've been talking about this in webinars throughout this month, and I got really tired of saying when the MACD line crosses over the zero line, because that's kind of a lot to say. So now I just say when the hopper happens. So what I mean when I say when the hopper happens is I mean that the MACD line is crossing over zero. When it looks like it does on this chart and it's going from below zero to above zero, that's a buy entry. Very simple, straightforward, and when it goes from above zero to below zero, that's a sell signal. So when the hopper happens, that's what we're talking about. It's a hopper. Okay, go to the next slide. So here's the basic, simple way to trade the hopper on a 5-minute chart. I'm going to talk about this a little bit, and I'm going to show you a few examples, and then I'm going to talk about how to trade it on a 1-hour and a 4-hour chart. And then from there, I'm going to let Rob take it away. So the simple rules for the 5-minute are that the first thing you do is pick a trading session. And when I talk about picking a trading session, I'm looking for times in the market when you can expect to see volatility. And you can normally see volatility in the first 3 hours of the active trading session. So in the U.S., that would be what I would refer to as the New York session. 8 o'clock in the morning New York time to 11 o'clock in the morning New York time. That's going to be a period of time when you would expect to see a bit more volatility in the market. The European session, Rob will have to help me out with the time conversions. For me, it's about midnight.
Well, you know, if you live in Europe, you know when your trading session is. That's all that matters.
Right, and then the third one would be that I watch anyway would be the Asian session. For me, that's about 4 o'clock in the afternoon. So whatever trading session you trade, you know what that is, and I'm sure you are familiar with what I mean when I say during the first 3 hours you can expect to see the most volatility. On my short-term trades, I want to get 5 pips or so and get out quickly. So I don't want to sit around with it going sideways for hours and hours in the middle of the trading session. I'd like to get in and look for my trade setups during the first 3 hours on the short-term trades. So you enter the trade when the hopper happens, either up or down. And then the last thing you do is you pick an exit strategy. And one thing Boris said tonight that I completely agree with is to pre-think your trade before you take it. So I know exactly which exit strategy I intend to use when I go to work on a trade. You can go to the next chart. So I have a couple of exit strategies I can show you tonight, and of course you can add any of your own. The first strategy is just a simple 5-pip profit target. You can enter your trade with a default setting in your trading platform that enters your trade with a 5-pip target, and if the market is moving quickly, which would be great if it does, you'll get your profit very quickly without having to think about it. You could exit on a trigger, and I'm going to show you some examples of that. You can exit when the MACD line goes back over 0, or you could exit at the end of the 3-hour session. And then I know that everybody wants to know what kind of stop losses we're going to apply to a trading system, and for the 5-minute charts, that would be a minus 15 pip stop loss. Now, that doesn't mean that you have to take a 15-pip loss every time. It's rare that I do take a 15-pip loss, but what it does mean is that you should never, or I should never, take more than a 15-pip loss on a 5-minute hopper trade. That's the maximum loss I'm willing to take on any of these trades.
This is really great information, and if I can clarify a couple of different things here just to make sure that I can pre-answer some questions that probably will come up, Jennifer. You're saying that there's a minimum profit target, we could call it a minimum, of about 5 pips, but it can be much greater than 5 pips. It could be 30, 40, 50, and on longer term charts it could be even 100 or more.
Right, and I'm going to show you a few examples of each.
Okay, great. Just to get that question out of the way, because it's already on someone's mind out there, and we want to make sure we're answering the questions. We know you're thinking about it. And then second of all, it's the most famous question ever. Do you enter a trade on a close of a candle, or do you enter it immediately when that line crosses? When we look at this first chart, could you help us answer that question?
Yes.
All right.
So I took copies of a few charts from the past 7 or 8 or 9 days, and the first thing that I'm going to show you is the example where we have a 5-pip profit target. So in these examples, this particular one is a euro-pound on a 5-minute chart during the U.S. session. We had a hopper trade set up because the MACD line crossed over the 0 line, getting us into a sell trade. In this trade, we had, it looks like, no drawdown whatsoever. While the trade took longer to pay off than I would like, it kind of went sideways for a while, it didn't really move against us. And eventually it did give us our 5-pip profit target. And in this instance, which is what we normally see, the move did continue. So if your number is something bigger than 5, it could be 6, it could be 10. I know Rob likes to trade with 20-pip targets. These moves do provide for the higher targets. When I'm doing my shorter chart, my shorter time frame trading, I like to get a smaller amount of pips and just get out of harm's way.
Now on
so that's just one strategy.
Now the red line running through from top to bottom, that shows the place where a candle closed. So you only enter on the close of the candle, Jennifer, is that true?
Okay, yeah, I can see how that's not clear. So where the red vertical line is going through, that's the candle where we enter the trade. And in this instance, you know, it does look like that's exactly the candle that where the MACD is crossing. This is an area that is discretionary. I actually don't wait for candles to close. I know that Rob does wait for the candle to close, but I don't wait for the candle to close. If you're doing a 5-minute chart or something smaller, it's easy enough to go ahead and wait for the candle to close. If you're trading from a 1-hour or a 4-hour chart, if you wait for the candle to close, you're going to miss an awful lot of the momentum that's behind the move. So if you agree to enter the trade before the candle closes, you just have to agree to exit the trade if by the time that candle closes, it's no longer a signal to be in the trade. And you know, that doesn't happen very often. Normally, when that MACD line is aiming for the 0 line, such as it is here, it's not going to miss. It's just not going to miss. So, so you could enter the trade as I do before the candle closes, and like I said, just be prepared to simply close the trade if it within 5 minutes, if that candle closed with a candle going up and the MACD line was no longer going below 0, I would say, okay, I was wrong on the entry and just close the trade. This is an Aussie Yen 5-minute chart, also from the U.S. session, showing that once we got into the trade, excuse me, we did have some drawdown on this trade, and that does happen sometimes, and that's why I have to have a stop loss point. You know, I have to pick a number which is the maximum amount that I'm willing to lose. Interestingly, in my experience with with Hopper trading on the 5-minute charts, -8 is a really customary drawdown number. I mean, it just goes 8 pips really frequently, and you know, most of the time doesn't go more than 8 pips against me once I get into the trade, once the MACD line has crossed over 0. And this is an example to show you that that certainly can happen, and in the end of this trade, we did get our 5-pip profit target. This was not a fabulous trade. This is a trade that barely got to its target. I don't like to barely get to my target. I like to take a piece of the trade that's right in the middle of the move and has, you know, safe margins around it. You know, but sometimes it just doesn't play out that way, and the MACD as a signal, as an indicator, you know, it looked perfectly awesome. So there was no indication that momentum was going to turn so abruptly on us. But when it does turn around and go the other way, you can see that the very next thing that happened was the MACD went up from below the 0 up above 0, producing a trade that I did not enclose with a circle exactly right there, which had you gotten out of that first trade with a loss, you would have had an opportunity to put it right back with a buy trade on the very next hopper. This is a pound-dollar 5-minute chart from the European session, and the red vertical line marks the candle where the MACD line crossed over the 0 line, where you would enter the trade. This is a perfect trade because there's no drawdown whatsoever. You get into the trade, and within 5 to 10 minutes you have your first profit target if you're only trading for 5 pips. Now, if you happen to want to trade for more than 5 pips, the Hopper does typically give us room to do that, and especially if you happen to get into the market during the first 3 hours of the trading session when there's a good amount of volatility, there could be some ranging at type activity from, you know, as seen from a 5-minute chart. And I'm going to show you some strategies for collecting a few more than 5 pips on these trades. So the next exit strategy would be to exit on a trigger, and I'm going to show you what that looks like. This is where we employ the signal line or the trigger line with the MACD. It's the red dashed line, and when the MACD crosses over the red dashed line, that's going to signal the exit for the trade. So starting from the beginning of this trade, on the 5-minute US dollar Canadian dollar chart, the red vertical line going through the candle right there, that's where you would enter the trade because that's where the MACD line was crossing from below 0 to above 0. And this is a great trade because there was relatively no drawdown whatsoever from the entry point to get into this trade, and you could either take your profit with 5 pips, or we could exit on a trigger. On a trigger, the exit comes when the MACD line crosses over the trigger line. I call that a trigger exit. And in this instance, exiting on a trigger would have given us approximately 20 pips of profit.
I love 20 pips.
Yeah, that's Rob's favorite number. So I have a couple of things to talk to you about on this chart. This is another dollar CAD chart. The red vertical line marks the entry where the MACD line crosses below the 0 line. And in this instance, the MACD line crossed below the 0 line, so the hopper happened before the beginning of my trading session. So let's just say I want to trade the first 3 hours of this active trading session, and the MACD line made its move just before the action started. So you can see how it's going sideways, price is going sideways, MACD is going sideways. But it is indeed below the line, so that would have been the entry. What do we do? Do we have to miss it? And my answer is, heck no, we don't have to miss it. So if we draw a line under the low that it made when the MACD was indeed below the 0 line, I'm going to wait for price then to come back below that level, and then I'm going to continue on with the trade as if it were the hopper happening for the first time. And in fact, at that moment, the MACD line is at that moment making its move away from the trigger line, and the histogram bars are starting to build some momentum. So that is all consistent, all indicative. So you don't have to be absolutely legalistic about that zero line, because essentially it's doing the same thing here. What's important is to notice momentum, and that's why I put the surfer on there to remind me that when you're out in the water, you're waiting for the swell. You're waiting for the indication. I mean, if you get out there on the flat water and you stand up on your board, you're probably going to fall off. There's going to be no momentum to carry you. And similarly, when there was no momentum in the MACD, even though it was just below the zero line, we needed to wait for that momentum to open up, for the indicator to show us that it was determining that there was a momentum signal. And just as an added benefit, we had an entry line on price below that recent low that it made the first time MACD thought it was making its move. Enters us into a trade. And then for the exit on this trade, you could easily have had your 5 pips. Looks like without any drawdown whatsoever. That would be in the circled area. Or you could have exited this trade on a trigger, which would have given you something closer to 10, between 10 and 15 pips.
Now, when Jennifer mentions taking 5 pips or taking 20 pips or whatever, we always mean that the currency pair moved 7 pips in order to give a full 5 pips of profit, or moved 22 pips or 23 pips total to give a solid full 20 pips of profit. We're always saying that the price moved further than actually 5 pips because you got to pay a spread. In Boris's case, he's going to pay a commission. But either way, it's got to move the full distance. We're not talking about taking 5 pips minus the spread. We're talking about taking 5 or 10 or 15. And that's a question that always comes up, and it's a totally valid question. And we know that some of you were thinking that. So
right, absolutely, and that has to do with how I pick my favorite pairs for trading this trade on the 5-minute charts when I'm only looking for 5 pips of profit. I don't want to trade a pair that costs me 5 pips of spread in order to earn 5 pips of profit. I'm looking for the pairs that I can trade with a little bit cheaper spread.
Right.
And the other thing to say about that is
the Mexican peso.
When you enter your trade, your spread will be taken out and your trade will be dropped in 1.5 or 2 pips above or below, you know, if you're selling above your entry line there. So I'm talking about 5 pips from your actual entry line. So as Rob said, essentially the market will have to move 7 pips forward. Okay, so this next section, when the hopper happens, we get into the trade, and then we're going to exit when the MACD line crosses back over the zero line. If we're lucky enough to get into a hopper trade when the market is trending, it can really carry us much higher before it gives us a signal to get out of the trade. This is a 15-minute chart for the euro dollar. The entry, and I had to make it small because you see it covered some time here. Even just on the 15-minute chart, this one lasted for 2 days. Entering the trade when the MACD crossed over the zero line. And there was a little bobble there, and there was a little bit of drawdown, but it was less than 20 pips on that particular entry, which is hard to see because I had to shrink the chart down to fit on one page. So entering this trade here, and then the exit, Rob, if you'll point to where the exit would be when the MACD line crosses back below the zero line. As a matter of fact, when the MACD line crosses back below the zero line, that creates a sell trade. But that, in this instance, is the exit for a trade. Now, this is not necessarily going to give you a higher profit every time, but if the market is trending, it will. If the market is ranging, it won't.
Yeah, and you can use your own definition of what a trend is. Lots of people last night and 2 weeks ago and a week ago asked what's the best way to determine a trend. The hopper is going to give you 5 to 20 pips very consistently. We'll talk more about backtesting and statistics when it comes to my turn. But it will give that profit very consistently. So that's the #1 consideration that you want to really think about. You want to think about how consistent it can be. If you want to turn it into a trend trading strategy, then just pick your favorite way to determine a trend. And we're not going to deviate or go off on a tangent right now about that. You can pick your favorite method of determining a trend. Any number of methods can work just fine.
Right, and I'm really glad you brought that up because it's a bit of an advanced idea, taking the hopper into more advanced trading. If you don't know the difference between range trading and trend trading, use the hopper on a shorter time frame chart and just take your 5 or 6 pips every time. if you are already, an experienced trader, and like Rob said, if you have strategies for trend trading, or if you trade the news and you're expecting a large reaction to an economic report release, something like NFP or something like that, you would want to get into a trade and you would expect to get more than 5 pips in a moment like that if you're that kind of a trader. So I'm just applying the Hopper to lots of different trading styles and trading environments. So when the Hopper gets bigger, I'm going to go to the 1 hour and the 4 hour charts. So the rules change a little bit. First of all, we don't need to pick a trading session. Time has no factor here. We enter the trade on a Hopper just like from the 5-minute charts, and we need a little bit more wiggle room, so stop loss can go up to minus 30 pips if you choose. Doesn't mean you have to wait for 30 pips. If you get into a trade and the MACD line goes back over your entry line, you can close the trade at minus 10 pips or what have you. You can pick a close similar to what we did before. Just pick a number, plus 10, plus 20, whatever your favorite profit target number is. You can exit on a trigger, or you can exit when the MACD line goes back over the 0 line, just like we did before. So you can go to the next slide. Here is a 1 hour dollar CAD chart, and these trades entered where I put the yellow line showing that the MACD line crossed from below 0 to above the 0 level. The Hopper happened, and we entered a buy trade that was good for 40 pips before we exited on a trigger being when the MACD line crossed over its signal line. And then there was a sell trade on that same chart that was good for 50 pips when the MACD line, when the Hopper happened and the MACD went from above 0 to below 0, exiting that trade also on a trigger. This is an example of if you wait for the MACD line to go back over the 0 line, it may not necessarily give you more pips. In this instance, getting out on a trigger gave us 37 pips, where waiting for the MACD line to cross back over 0, price had begun to fall really rapidly, and so we didn't get as much of a profit. And sometimes we can go all the way back down to break even if the trend doesn't really take off in our favor. Aussie CAD produced a really nice one here. Entry came when the Hopper happened. MACD went from above 0 to below 0. Exit on a trigger gave 127 pips. These are super recent trades, by the way, too. And this is a chart that a friend on Twitter sent to me. He took the Hopper and applied it to his current trading strategy. I don't know his current trading strategy, but it looks like he has some support resistance lines on there, and he used the Hopper to time his entry, and he used the trigger to time his exit, which is great on this chart because the entry happened right as price was rising up off of his support level, and the exit happened as price was running into his resistance level. So I love it when indicators and systems sort of mesh and give you the same information. That always makes me really happy.
And for those of you that are familiar with Twitter, and I know many of you are that are here tonight because you know Boris, you can kind of join the Hopper movement. I don't want to call it a movement. It's not a religion, although we're thinking about making it a religion. Thinking about
you should. You'll get all the tax benefits.
Hopper scriptures, and Jennifer can be the Hopper prophet or priestess or something like that. If you want to be a part of the Hopper community on Twitter, use the hashtag HopperTrade. That's catching on, and then we can look at your charts during the day and comment on them and talk about them and become friends, and then whatever, doesn't matter. Let's go on.
So I just wanted to wish you all happy Hopper trading, and it's great to see Rob and Boris out on their surfboards.
That's so good. Okay.
I have never been on a surfboard in my life.
Okay, for those of you that are still here, and all of you pretty much are, we have about 7 minutes left in tonight's presentation, and I want to take you through a number of things in rapid fashion. It's Rob Booker here. You've heard from Boris tonight. You've heard from Jennifer tonight. I'm not going to take too much of your time. I want to talk about statistics, backtesting, reliability, legitimacy, depending on a trading strategy that you've never seen before, and the like. I also want to preview the red hopper, which is an adjustment to the hopper trade that I invented. Preview it. We're not going to fully get into it in tonight's webinar, or else we'll be here all night. And then I want to invite you to be a part of a hopper trading class that Jennifer is going to lead in the month of November. I call this the red hopper. It's the angry rabbit, in other words. I spent the last few weeks and months actually working through Forex Tester and other backtesting software, both automated with an expert advisor on MetaTrader and manually testing it by hand on Forex Tester and looking at the red hopper. I tested the hopper as well, and much of what I'm going to say is going to be applicable to both. But it's a common question. I mean, what can you expect to make from a trading strategy that you learn in a webinar like this? And I'm sure you at least expect me to have an answer for it, although you are going to know that I'm going to also recommend that you do your own testing. Okay. In 2012, the red hopper, which I'm about to show you, made 1,412 pips. That's over the course of about 165 trades. It produced 165 trades then over the course of about 10 months. So on a 15-minute chart, it's going to produce 15 to 17 trades per month. I trade on the 15-minute chart using Jennifer's methods, and I found that the hopper trades and the red hopper trades produce essentially the same number of trades per month. So you're looking at about 15 trades per month. This is the equity curve over the course of the last year. This is a copy of my back testing trade by trade. It's so small that you can't read it. On the website 15minuteforex.net/invitation, which is also the page which invites you to be a part of the Hopper trading class starting in November, I will post on October 19th this spreadsheet in Microsoft Excel so you can work through it yourself. You'll find that Hopper trades on Fridays are not very good, and hopper trades on Thursdays were very powerful. And there's some reasons behind that, and we don't have a lot of time to get into it. But the back testing is done. These are hundreds of trades, and there's many more joined to it. Here's what I did with the red hopper. I traded the euro dollar only on a 15-minute chart, and it produced exactly 1,412 pips so far in 2012. The biggest loss was 50 pips. The largest gain was 70 pips. That's a pretty good reward to risk ratio. On average, the winners were slightly bigger than the losers, and it had a better than 60% win rate. This was also true of the hopper testing that I did based on what Jennifer shared with you tonight. Remember, there are a variety of different profit targets that you may choose to use on Jennifer's hopper. On this version of the hopper that I'm showing you tonight, the red hopper, hopping mad, red hopping mad, the stop loss at a maximum was 50 pips. The profit target was 70, but I used a 20 pip trailing stop, so the profit targets varied from trade to trade. I'm going to show you some examples of what a red hopper looks like. A sell trade is the candle on the chart that you see right now, designated by the green arrow. This was a 30 pip winner in this instance, using the trailing stop methodology. The red hopper looks at Jennifer's standard hopper, which is the MACD signal line crossing the zero line, combined with a stochastic oscillator filter. I'll get into that in a moment. Here's an example of a sell trade. I don't like to say we call the tops or the bottoms of the market. I often will say that he who tries to pick bottom only gets stinky finger. So I'm not really into picking bottoms or tops. I'm just into taking trades. What's nice about the red hopper and the hopper are that you'll pretty much get yourself in at either an early entry or in the middle beginning of an entry. That's what we're trying to do, in the middle or the beginning of a move. In this example, it's right at the beginning. We get a red candle at the top there, the red hopper. It's a sell trade, and that's a full 70 pip winner. You can see that it moves in our favor. Jennifer used the term drawdown a few moments ago in the webinar. That refers to the amount of money lost in the midst of holding the trade without closing it. It's the pain you experience while holding on to a trade. Many of these red hopper trades, I like them because there is not much drawdown. It's got a filter on it, so it takes fewer trades, but the ones that it takes either go against you immediately, but they don't drag on forever and hurt you. Here's an example of a buy trade. You can see the green arrow pointing to a candle with a red mark through it. That's a buy trade. And that was a 30 pip winner on this methodology. These are just the most recent red hoppers, actually, from my own charts. Here's a buy trade from the 21st of September 2012. You can see the red line running through a white candle at the bottom of my chart, right near where my mouse is right now. That's a buy trade that was good for 60 pips. You can see that right before the market exploded with a very momentous move, the red hopper called the market. Jennifer loves to use that word, momentous. Here's a 40 pip winner. You could see that from left to right. Once again, the red hopper is a standard hopper trade with a stochastic oscillator filter. The biggest loss was 50 pips. The biggest gain was ever 70 pips. It maxed out at 70 pips, and it had a better than 60% win rate. Lots of you ask what currency pairs Jennifer likes to trade, or I like to trade with these strategies. The euro dollar is the grand poobah, queen, big cheese, the one that calls the shots, the one that's in charge. We like the euro dollar with this strategy, but we've looked at and done some initial testing with the Aussie dollar, dollar CAD, euro pound, Aussie Canadian dollar, and just about any other currency pair you can watch. We do not favor the exotic crosses, such as the Mexican peso, the Polish zloty, the South African rand. These are not currencies that we're going to trade with these methodologies. The Turkish lira, we don't want to do that.
Hey, Rob, say zloty again.
The Polish zloty.
Very nice.
Okay, the red hopper. Has it been automated? Yes. It's already been built for MetaTrader 4 as an indicator and as an expert advisor or robot. We're building it for Thinkorswim, eSignal, TradeStation, the FXCM charts, and for NinjaTrader as well. You might be wondering how to get a copy of the red hopper, or a copy of the trigger finger, or a copy of the golden hopper, or a copy of Jennifer's RSI trade, and a number of other strategies. Well, tonight Jennifer taught you the hopper for free. And in November of 2012, she starts a 20-hour-long trading class all about the hopper and its derivative trading systems, meaning other systems based on the hopper that include a variety of entries and exits, long-term, short-term trades that literally produce hundreds of trades per month with hundreds of back-tested examples to back them up, screenshots of hundreds of historical trades so you can measure what you're doing against what you're looking at on the charts that we traded. And you can find more information about that. You can also watch a replay of this webinar on the link that you see on your screen right now, 15minuteforex.net/invitation. We'll send you an email tomorrow that includes a recording of tonight's webinar. But if you want to get right to it, last night's Hopper webinar that we did for about 500 traders is available right now at that link, 15minuteforex.net/invitation. There are 12 spots left available for the November class. Jennifer doesn't do these very often. They're not expensive. Jennifer is not in the business of making her living from educating you. She's in the business of trading. That's why she shows everything that she does. But there is a fee for the course, but it's very small, and we'd love to have you join the course. I'll be there as a moderator and a host.